This is a phenomenon in investing which can be quite beneficial if you're aware of it, to help you find better deals, particularly throughout the later end of the year, and something just to be more aware of. So the concept that I'm talking about is tax loss harvesting, and that all that means is that basically fund managers will, particularly if it's been a profitable year for them, meaning that the market's gone up a lot or certain big stocks have gone up a lot, such as Facebook that you're seeing, Amazon, Google, etc., have gone up a lot. What will that mean? What that means is that chances are they will be basically taking losses on purpose on some of their companies to offset any gains they have. So, for example, let's say they made this massive fund they run, they made $1 billion profit. They then might have taken $300 million of losses in these other positions. And then what they'll do is they'll intentionally sell those positions. So their taxes for the year in terms of profit is only 700 million rather than $1 billion. And then what they'll do after that is essentially they'll basically plan to buy it back the next year, so that their aim is to basically sell it knowing that they can then most likely buy it back the next year at a very similar price. And then as a result, they'll be able to benefit from not having to pay taxes on that set amount and basically indefinitely deferring it. And that can really help your sort of returns overall, because if you think like the next year, if you have 5-10% less to invest with, that doesn't sound like a whole lot, but if you keep doing that for a decade, it's going to be very beneficial. So it's a strategy that a lot of institutions like to apply. It's called tax loss harvesting. And this can be very beneficial for you as an investor if you're aware of this, because oftentimes what will happen is you'll see, particularly in years where there's been very high returns on like the general indices or just very particular stocks, and other stocks have sort of been left out, where there's a divergence, what you'll then see is that these businesses that have done very bad for the year, for example, they might be down 50, 60, 70%, will then go down even more because of this tax loss harvesting, because that's when they'll reduce their taxes the most. And because of that, these stocks will oftentimes during these periods drop even lower than they normally would. And that's oftentimes where you can scoop up these great deals. So if there's anything that you've been sort of eyeing that throughout the year and you go, oh yeah, I sort of like that, it's interesting, but it's not quite there enough, then though I wouldn't necessarily rely on this strategy, because it's not certainly not a guaranteed thing, and you're never going to try and time the bottom. That's not what the intention here is either for me. But if I can then find things where it's on my watch list, I'm like, right, this is pretty interesting, I know then I'm going to have a pretty good shot during that window of September, October, November to basically keep an eye out on these businesses in particular, to then see if anything falls immensely. And oftentimes you will find a couple where, I don't know if you've ever looked back on sort of any stock charts or anything, but you'll generally see like the bottoms of certain stocks will oftentimes be during these periods of September, October, November, where for the last year or the last 12 months or more, they've done very poorly, the stock has fallen, and then it sort of bottoms out as everyone's selling to then defer their losses, defer their profits so they pay less taxes, and then with hopes to buy it back next year at the same price. And that in itself is a very good buying opportunity, that window of time. And that's where I managed to scoop up some good deals as well. So that's something I'm sort of using and actively being aware of. I wouldn't personally, for me, in my opinion, be dependent on that, and certainly not something I'm trying to time. But if it can help me sort of meet my investing criteria where I want to set return at least, or be of good enough caliber to be in my investing portfolio, then that's certainly something I'm going to think about there. Hopefully that's useful for you guys, especially as it's now October, and so that we're starting to be in that time period of September, October, November. Yeah, you could arguably say December, but usually sort of get a bit of a rally towards the end of the year. And I think people start to catch on to it a bit. So yeah.